Welcome back, everybody, to another episode of the Wealth and Wellness Report. My name is Diego. I'm your host, and today we've got an amazing guest flying all the way out of Jersey, Jason Staine. How are you, man?
Thank you. It's great to be here. This is my first time in San Mateo. It is absolutely beautiful here.
Yeah, absolutely. California, the sun decided to come out today.
Yes, and it hit just right. It's been cloudy for 3 days in Monterey. Drive a little bit east, and bang, there it is.
Amazing weather is why I've have not moved and wanted to move in like 25 years. But I'd love for the audience to learn, who you are, where you're from, man.
Sure. Yeah, I'm from Bergen County, which is a little county just nestled outside of New York City. Very busy place. I spent 22 years as an electrician, found real estate. Once I got my license back in 2013, you go out and you start working for people, and you're working for real estate investors, right? And, you start to ask questions like, hey, how does this work? How do you find these things? How do you fund these things? How do you buy these things? And some of them will share, some of them won't. And then you find that there's this whole world of information that's at our fingertips these days. And you start to dig a little bit further. And then you find there's amazing people that are willing to share how to do things. Connect with them, and you keep building from there, and it's been amazing. The journey's been amazing.
And you've been in the union your whole career?
I got in 2003. I was just about 20 years old, and I still have an active book. I don't work much out of the union hall at this point. It's other than just to keep maybe some benefits lubed up. But I'm done with that. I'm full-time real estate. This is my first full year in real estate. We're flipping properties in North Jersey, fixing and flipping, and we have a lot of activity and a lot of growth. This is a big growth year for us.
I'm really interested in the origin story because a lot of, and you probably know, a lot of the trades and the mindset in the trades, they have what I like to call the contractor brain. They don't think beyond the income that they're trying to generate.
That's right.
And the time that they're willing to provide to make that income, but to think bigger and outside of the box or at a higher level, like a real estate investor. What was that transition like for you, moving from that origin?
That's a good question.
And going into the real estate business?
So a lot of us, we only learn to trade time for money, right? So for example, I would get excited about the idea of working 7 days a week, 12-hour days. I'm like, look at all the overtime, look at all the money. And then you come across people that make that in a day, make that in an hour, they make our year's salary in a day. They make our year's salary in one maneuver. And you start to look at it and you're like, all right, well, how much time do I need to train my mindset and change my skill set to be able to do the same thing? And it takes time. Some people it's instantaneous. Other people it's, a little more time invested, right? I'm one of those people. It's taken me a little more time to get there, but you can start to see the benefits of it once you take the action and implementation, right? And being in the right rooms.
Was there a moment where the traditional path stopped making sense to you in that journey?
Absolutely. And I would say it was around 2009, right? So I had a pretty stable job with a good outfit back home. I was there about 4 years. It was like the party was never going to end. If I wanted overtime, it was available. I was never laid off. Traditionally, sometimes you get laid off, right, in the union, right? The job wraps up and the contractor really doesn't have a place to shift you to. And they would just say, hey, thanks, but I really don't have a place for you. So you get a layoff. And you take the layoff slip and you go down to your local union hall and you sign something called the out of work book. And you're just a number on the list. And, depending on economic conditions, right, there might be an abundance of jobs available. And your downturn is maybe a couple weeks. Sometimes it's a day. Other times it could be several months, right? At that point in time in 2009, it was the first time I had ever reached that point where it's like I didn't have a place to go. I signed up and they said to me, expect 18 to 24 months before I can see a 4-week job. And I laughed. I'm like, no way.
Wow.
And back then you had to call in and see where you were. So I called in about 3 months later. I'm like, hey, what's my number on the list? I had moved 3 spots in 3 months.
Wow.
And I'm like, all right, it really is 18 to 24 months. So I started looking at alternatives for careers.
And how old were you at the time?
Oh, I was 2009. That would put me, I got to do some quick
25, 26, 27?
26. Yeah, like 26, okay. 26, 27, right.
So like getting a steady job and making steady income is important, I think, to a person at that age.
Oh, it's foundational, right?
Yeah,
like you're losing, and because of the economic conditions at the time, right? If you stayed there in that position, you're finding that you're losing massive chunks of your career in core years of work where you should be building wealth. So that, like, I'm 42 now. When you get into your 40s, you've bought assets, you've bought investments that you can now leverage to propel yourself even further. I didn't have that ability to do that. Yeah. I didn't even own a home in those days.
Wow. So you're hoping to score a job.
Yeah.
And is that where your like mindset kind of shifted, and then you began to look at investments, and then how did real estate get in there?
So I didn't look at investments or real estate at that point, but I did actually start video editing, right? Because I had a passion for it. And I picked up some work. I've actually filmed, like I was saying, I've filmed some skate videos and things like that. And that's kind of how I got the ball rolling. So I told myself how to do that, but I quickly found that I wasn't making money doing it. And then my wife, but she got pregnant. So I'm like, all right, I need to find income. So I did what any good electrician would do in the union. I started packing a suitcase and hitting the road. Right. So I started traveling to different union halls around the country
to get work,
to get work. Because there were some pockets where you can get work, but you had to travel to it. So I would hit the road, and I remember it was probably Father's Day in 2014. So now we're 5 years, right? 5 years of this rat race. I had gotten my electrical license in 2013.
And by 5 years, you've turned out journeyman.
I was already turned out in 08. By 08, I was already turned out. But 5 years of running through the road, running through the layoff, running through the hamster wheel of like, I don't know where the next job's coming. Yeah. Right. So I remember it was like 2014. We had just gotten married, and I didn't have a job again. Right. So I hit the road right after we got back from our honeymoon and everything. And I remember it was like Father's Day of 2014. I remember sitting there Sunday night. We were working 7 days a week. Right. I wasn't excited about 7 days a week at this time. And I'm sitting there Sunday night. We're on night shift, Father's Day, looking around at the crew of 60 to 70 people and going like, wow, this is it. Like, this is my career. Like, I'm not even home with my family on Father's Day.
Wow.
And I started leveraging my electrical license at that point.
So you started doing private work.
Yeah, I started doing private work because I wanted to be home. I wanted to be in control of my own income.
Yeah.
And that's when I started to discover that the people I'm working for buy real estate. And then from there, like, it took about a year or two, I started like really looking into it, and I'm like, all right, there's something here. Cause like the one guy I was working for in Jersey, I'm like, he buys properties like every week, like clockwork. It was like
bagels
insane.
at the,
it was insane. Yeah, it was insane. I'm like, well, where's he getting all the money? Like,
yeah,
I know he's not Warren Buffett.
Right.
But he's very well off.
Yeah.
His wife was actually a very well-known makeup company, like the CEO. So there was a lot of capital there, but there wasn't this much capital, right? Like, there wasn't this much free capital. I'm like, they're doing something to go out there and buy all this stuff. So I started asking questions. He kind of smiled, but because I knew him like personally, he kind of smiled, and he's like, you know, just keep digging. You'll find the answers, right? He wouldn't share, but
yeah,
you know, he was very
stoic,
concealed about how he does things. But I respected the man, you know.
Yeah. Wow. So that was kind of your first exposure to real estate investing.
Yes. Yep.
But how about creative finance? Like, how did you? Because that's how we met. We met through a creative finance community.
Yes.
Subto.
Yep.
And I was in the group, kind of new, maybe 6 to 8 months in, and I was trying to find somebody in the group to help me with life insurance.
Yes.
And that's where I found you.
I jumped right in the comment section. I'm like, I can help you.
I can help you. And we hit it off. Yeah. So how did you get into creative finance?
So
from that point,
what happened was there was a point where I'm like, I need to get better education. I need to get more formal education. You know, podcasts. I was a big fan of Bigger Pockets podcasts in those days, right? Grant Cardone's, you know, his different things he was doing. But I wasn't getting traction, right? I was on the information instead of action taking, right?
Gotcha.
So I heard there was a 3-day event. It was a Fortune Builders event. This is, I want to say May of 2017. So I'm like, I want to go to this event. I want to see what an in-person event. I never did an in-person event. I'm like, let me see what this is about. So we paid a few bucks, my wife and I, and we went. I went to the event because actually my son had a fever the day of the event. So she stayed home with our son, but I went, and I came back and I was like, this is this is it. And I didn't have the money to buy the expensive mentorship at the time, but I knew like, okay, I had gotten something exposed to something at this event that I had not gotten from the other podcasts. So we started going to meetups, you know, getting more formalized with the way people were doing things. We started networking. We started wholesaling at that point. Our first wholesale transaction, I went back and looked at like some records and things like that. It was in winter of 2019. That was the first wholesale transaction we did. So that's a long time, right?
Yeah.
May of 2017, you go to this great event and you don't close your first deal until, you know,
2 years later.
Winter of 2019, right? So there's a lot of things that can be done to accelerate like getting business done, right? And we did not take those steps until that point. So we went from there into different communities, right? So we started Astro Flipping. We bought their program in the spring of 2019, same year, right? And then a few years later, we found Pace on YouTube.
Through Jamil's group?
Same thing, just by listening to content. And all of a sudden, like, who's this Pace guy? This stuff's incredible, like so many of us. And signed up for Subto shortly thereafter.
Amazing.
I want to say that was 2022, October of 2022.
Oh, okay.
So I've been a Subto member almost 2 years now.
So like I joined literally a month after you did.
Yep. So we're
November of 2022.
We were listening to the same content.
Same thing, man.
What is this stuff?
Yeah.
Now it's funny because before that, like I had a couple partners on the wholesale side, and I was like, dude, we should do this thing called Subject to, right? I didn't know how to do it, right? I had a couple of attorneys that told me they could draft this stuff up. So they were always cash guys, like, no, cash. But I'm like, you know, like some of these deals, like we should probably try to take this stuff over. And I would always try to pitch it, but, you know, ill failed, right? I just not doing it right, not understanding the fundamentals. Yeah. And I'm like, I got to learn how to do this. So I actually thought it was just an education platform, right? Like watch the 6 modules. I know, I understand how to do Subto, you know, like so many
just
other
like
things
every
out
other,
there.
Yeah. There's so many out there.
And then you sign up and what happens? It's like information
overload. Yeah.
It's like drinking from a fire hose, right? Like you don't know which Zoom. Every week there's like Zoom after Zoom.
Every day.
Like every day.
Yeah.
It's like,
every day.
And it's different subject matter, right? Like if you're not into the, you know, cold calling and text mess blasting, you know, people, or you're not into the foreclosure, there's one for, you know, RV parks. There's one for just doing the paperwork. There's one for technology,
self-storage, like everything.
And I realized it, and then you start to connect with everybody, and that's how we met. Right?
Yeah, right. And so very similar story to me too, because I was thinking all about seller finance. Like that was in my brain for the prior 10 years is rent to own, lease option. I didn't even know what it was called. I just wanted to make a relationship with the owner and then just give like, here's payments. Let me just buy the house over time.
It's the oldest trick in the book.
It's the oldest trick in the book. And when you have affordability like issues like we do here in the Bay Area, even 10 years ago, like things were almost out of reach. So serendipitously I had moved out of a place that I was nearly going to buy seller finance or rent to own, but mold started coming out of the windows and like it just, the house was really, really in bad shape and found this place. But when we got to know each other, it was really mostly on like life insurance and, you know, this Rockefeller method, like the ability to use life insurance contracts as a tool within this toolkit that we're developing as investors, as business owners. I'm really interested to know first, like what was your first creative deal? Was it that wholesale deal in 2019 or did you have something else that was like really, unique?
First creative deal was a 3-family house in Newark, New Jersey. We bought it subject to. We tried to short it. 14 months of waiting for payoffs. The lenders just wouldn't play ball. They basically called up my team of negotiators and said, I don't care who makes the payments as long as we get our $28,000 back. There was a $28,000 tax lien that we had paid, that they had paid to avoid the bank
from
an investor, a tax lien investor, taking the property out from under the bank.
Got you.
So they paid it to keep the property, but they said, we won't take a dime less than what's owed on the property. So they wanted it was a great property. They wanted this particular investor wanted the property. And then by investor, they're lenders and service companies. They call them investors.
Sure.
So from there, I'm like, I don't know what to do. But I had already joined Subto. I was a few months in and had made some connections. And those connections were key in kind of setting me in the right path of how I can take it subject to. And fundamentals that I didn't understand, I now understood a lot better.
Yeah.
So again, the relationships of everything. But to go back to like the life insurance thing. So throughout my time of being laid off and being frustrated with the union and not having consistent employment, to build the legacy that I was looking to build, I call it my second attempt at leaving the union, right? So the first attempt was when I got my contractor license. I got really serious about being a contractor and I went out into the world myself. I put all my eggs in one basket and that basket eventually let loose. And that was about 65% of my revenue. And that was in 2017.
Interesting.
Right.
Yeah.
Which is kind of coincides with the shift mentally where I'm like, I really just want to do real estate. I don't want to be a contractor. So I went back to the union hall at that point. And quickly, a couple months of into that, I'm like, all right, I need to get back to what's calling to me, right?
And that was real estate.
It was real estate, but it was also like I took an interest in the life insurance, the life insurance contracts that you can borrow from, and that I started reading books and got well educated on that. I tried to find agents that could create this stuff, which, as you know, is few and far between, right? Indeed. A lot of agents aren't aware of these sort of structures, and it's not their own fault. It's just the training inside the firms that they're working for.
Makes sense.
But I took a job that basically no one wanted to do with the union, which was climbing cell towers. We climbed transmission towers, and we installed cell sites on top of energized, power lines, essentially. And I did that for 4 years. While I was doing that, I studied. I hit the books. I studied real estate. I studied finance. I became a student of finance. And I'm like, all right, I could probably do this life insurance thing. So I set myself up with a bunch of life insurance policies. And at the end of the process, the gentleman that had worked on the case with me and my friend, I'd known her for like 20 years. They're like, you might be a good fit for this business. I said, maybe this is the thing, right? So I went and got licensed. I passed the test, and I'm like, all right, let's go. I'll join the firm. So I jumped in full time. Second attempt at quitting the hall, but really real estate was always in my heart. And I thought it would free up a lot of time to do real estate, and I was wrong, right? It's very captive. But I did get the education that I needed for the policies and the type of structures I wanted to create. So had I not done that, I wouldn't have been able to provide the service that I gave to you when we sat down and so many other people that have helped along the way.
Yeah.
So I wound up creating a system where I'm independent. I work on a referral basis, and I continue to do policies. But my primary focus is real estate. Yeah, and I still write the policies because I understand the process, and I have people I can go to and say, "Hey, I need help putting this stuff in a proper illustration that is suitable for the people that are coming to me."
Those initial conversations that we had were so eye-opening and for me very heartwarming because we had so many commonalities. Yeah, and your mindset and the way you're approaching the life insurance contract was unlike anybody else that I spoke to. It was all in my head. I was, I think, on the same path as you were, like learning, trying to absorb as much as possible, using it as a tool and integrating it into a multi-layered approach with real estate business, private equity, all that stuff. So when I had this initial conversation with you, I was talking to Katie. I was like, I think we found our guy, because the previous life insurance agent that I was speaking to had no clue. I mean, the two, like you look at the two designs and like night and day. One was obviously driven to increase the most in commissions for the agent. And the other one was tailored beautifully for the customer, for the client. I'd love for the audience to know a little bit, like, can you kind of break down a life insurance contract that, like a real estate investor or a business owner would want to use? Sure. Like, so, 5-year-old kind of definition, right?
Because this could be a very deep conversation.
Yeah,
so
real quick.
A lot of people are familiar with infinite banking concept, but I like to say that what happens is I get a lot of requests for an infinite banking policy. And I want to be clear, there's no such thing as an infinite banking policy. It's a concept. And, like any other concept, it's how you view the flow of money. This is how I personally feel. So there's ways in which we can structure policies that give access to policy loans, substantially large policy loans in the early years of the policy, Whereas traditionally, it would take many years for the loans to be large enough to have an impact on the growth of a business. Now, these aren't like the end-all be-all investment products, right? They do take time to grow, right? And there are avenues being explored right now where we might be able to accelerate that. But the concept is that you can have a large pile of cash in a life insurance policy that you can borrow from at any time, at any age. The reason we borrow from it is because it's tax-free. It's considered a loan, and debt is not taxable. The other part that's really important to take into consideration, that if, let's say I have $100,000 of cash value in a policy and I borrow $100,000 from my policy, I'm not actually getting the loan from my policy. The insurance carrier is giving me a loan from the general fund and collateralizing my death benefit. So the $100,000 that is showing in my cash value is still collecting interest, even though I borrowed it out. And you can borrow it out for anything. I don't have to tell them what I'm using it for. The other side of this is that it can be used as a retirement supplement in years to come. So a lot of us have 401ks and we have, money invested in the stock market. If there's a red year, and there's always going to be a red year at some point, and at some point it might happen during our retirement. Well, if you take money out and draw down your 401k in a red year, right, it takes a lot longer to recover that in the positive years. If we have this other pile of cash that we can draw down in a bad year in the S&P, we can let that recover and grow in the positive years, right? So it gives us options. We could transition from A to B to C. And that's the beauty of having like a diversified portfolio in that respects, where I've planned ahead and I see where I want to be when I'm older. And I want to be in a position to do stuff with that money while I'm on my way there. But now I have an option when I'm older. And you don't pay these things forever either. You're going to pay them for a decade, maybe 15 years, sometimes longer. And then you never put a penny into it again after that. And it continues to grow because it's considered paid up in full. Yeah.
That's such an amazing tool that I think a lot of people need to learn more about. And you guys could listen or read the book, what would the Rockefellers do? I think that's a really good read to kind of dive deeper into it.
And the other book is from Nelson Nash, How to Become Your Own Banker.
Yeah. It built that autonomy and that ability to leverage out of your own personal finances is going to move you further away from the financial institutions that are only exploiting you and leveraging this fiat currency and this debasement of the economy. And if you can protect this money that you work so hard for and develop this lasagna of layers, investment layers, I think that's what all the the billionaires are doing, you know, and they don't teach you this stuff.
And like, for people that are maybe hearing this for the first time, right? My kids have policies. Your son has a policy, right? And a lot of times it comes as a surprise to people. They're like, you put a life insurance policy on your kids, and it's not for a death benefit.
For life benefit.
It's because if you study the law of compounding, study the rule of 72, right? How long does it take for money to double? And if you think about your working career in terms of the rule of 72, and let's say you're averaging 5, 6%, or even 8%, if you have a 35-year career or 40-year career, how many times is your 401k actually going to double over the course of that 40-year career? It may only be 3 or 4 times, depending on where you're starting and how you're invested. I'm starting my kids at, my kids are 14 and 9 now, but they've had these policies for a few years. Started them.
Wow. Yeah.
They're way ahead in terms of where I was, because I didn't have any retirement accounts until I was in my 20s, let alone a whole life policy until I was in my 30s, like a properly designed policy. So they're 30 years ahead of me in the compounding time frame and the time, life cycle, right? They're going to be in their 30s going, okay, like I got a little bit of a head start, right? We're putting money, what we can, into those policies. You don't want to overdo it. But
exactly.
It's good to start. You're planting a seed.
Yeah. So how do you explain all of this to the folks that you were working with in a hall? Like, you were probably looked at like a crazy person.
Yeah, absolutely. And it's so funny because like I have businesses, right? And you can't collect unemployment when you have a business. And like some of the electricians that are aspiring to get their license and start their business, like one of the questions I had when I got my license, how do you collect unemployment when you got a business in your name? And someone said to me, he's like, why do you care about collecting unemployment? Well, because I paid in and this, he goes, you're worried about, I think now Jersey unemployment is like $832 a week. And like my response to that is like, you're worried about $832 a week. You could go make $1,000 a day. Right. I mean, legit, you can make $1,000 a day with your electrical license. So like, stop worrying about the small stuff. You're just, you know, in that case, it's a mindset issue. You don't believe that you can make the money on your own, and you're falling into the trap that so many other people have told you. No, one of the greatest, and I mean this sarcastically, pieces of advice I ever got from electricians that I worked with when I started out was base your life off of whatever unemployment pays you. This way, when you're laid off, you can make your bills.
Oh my God.
Right. Now you want to talk about like scarcity. You're basically saying that my career is going to be a failure.
Yep.
And that I need to prepare for the time when I don't have a check.
Wow.
And like, I don't want to be on survival mode. I want to thrive. Right. So
so
it's eye opening.
How did you balance the grit of the trades and like this beginning stage of implementing the strategy of investing?
There was no balance.
There was no balance. Yeah.
I worked my 30s. I look at like from like late 20s into like late 30s, like age 40, I worked it to death. Like those are like prime years, right? Like I like think about how many like physical hours I put in. And even when I was 40, I was working out of the hall, and I took a overtime job and ran a project alongside a team of people. Yeah. And we worked six days a week, 10 to 11 hour days from January 2nd up until I left Thanksgiving. Wow. And then we even had some streaks with 7 days a week. So we did like 5 Sundays in a row. Yeah. So I say like that block of 10 years is like a blur. Like it's like an absolute blur.
I can relate.
And that's all trading time for money. Yeah. And you do what you need to do, but you got to keep setting money aside and then plan for like the big chunks that you can make on your own, like flipping a property. If you make $60,000 in one flip, look at it as though you bought yourself 3 months of implementation, because you could probably pay your bills for the next 3 months very easily with that 60 grand. And then take those 90 days and go all in. And take action.
Is that what you would tell somebody that would have been in those shoes, like maybe the younger Jason that was?
Absolutely.
Yeah. So
buy yourself the time, do something to buy yourself the time. Or, you know, sometimes starting a business, you almost like, because we make good money in the union, right? Even when I'm contracting, I think there's always a period of time in my experience where you have to accept a dip in the week to week checks to get to the I call it the rip, right?
Yeah.
Right. You're going to be down for 3 months, 4 months. And then you get through that little valley, and all of a sudden you're like, okay, well, this is starting to get easier now. Yeah. And it comes in.
And that's a good way to get seasoned as an investor, because you know that saying, don't trip by the dip. Yeah. Because what goes up will eventually come down and then go back up. Yeah. How did this Subto community change your thinking around what was possible? I mean, it sounds like you made some really great connections, but kind of fast forward a little bit with creative finance, and now you've got, you know, the reps in. Like, can you speak to that a little bit?
Well, I'd say mastermind. When I went to the Pace's, they call it the Lastermind. It was the last mastermind that Pace did. It was October of 2023. Okay. Right. It was right before Owners Club had emerged, right? We didn't even know what Owners Club was going to be at that time. Pace had the vision, and he just rolled it out like the following year. But I went to that mastermind. It was so impactful. Like the stories I heard, the people I met, the people that were doing things, you know, I remember sitting there and I was just barely like, you know, getting deals done. I was getting stuff done, but not, I mean, the gentleman next to me had just closed a 125 unit RV park. The gentleman next to me, the other person to the right of me, was like, he just had his first triple digit wholesale fee. And I'm like I'm in a room full of whales, you know, and it's like, you feed off of that energy. And you start to get more confident in your ability to do stuff, and the network of people that you meet nationally and locally. Like, if there's something that I can't do, like logistically can't figure out, like because of this network, I can call different people and say, I need help with this. And I could bring them in, where a lot of people are just willing to just like assist and be like, let me provide some value to. Yeah. And it's just like, you don't find that.
It's a culture.
Yeah. It's the go-giver culture that Pace has created.
It's something that I've yearned for so many years, man. Like just wanting to be around people that I felt were like-minded, that were giving before they were receiving. In your opinion, what do you think separates people who want to scale from those who stay stuck?
It's definitely mindset, but it's also about getting into bigger rooms, I think. You know, I recently spoke at an event in Jersey at an expo, and I know a lot of the vendors for the last several years, and I see a lot of the vendors are still kind of doing the same thing. They've grown. Their businesses have grown exponentially. Mm-hmm. They're still kind of doing the same thing, right? They're still there. They're still kind of, you know, providing the same value and the same tools to people in the industry, which is fantastic because these people are like the best at what they do. But I look at it for myself and I say, you know, 6 or 7 years from now, do I still want to be flipping junkers in Jersey? It's debatable, right? It depends on what the business structure looks like. But, you know, I see myself kind of ascending to another level, right? In that respects, like, you know, at some point you look at the asset classes that you're working in and you're like, all right, I'm ready for the next challenge. I'm ready for the next challenge. I've always had that demeanor where I'm like, all right, I accomplished that. I'm ready for the next challenge. You know, and I've always found myself doing things to completion. Like, you know, I always said I wanted to film a skate video, right? Yeah. Which was like the hardest thing I had done at that time, was getting a bunch of knucklehead friends in their 20s together, right? And putting something like that together. And you did. And I did. Yeah. And I did twice. And then I had my son and I had to grow up and do different things. But, you know, riding motorcycles, right? Like I felt like taking a leader bike, 1,000cc leader bike around a racetrack and just sliding your knee around a turn was like one of those things that was so unattainable. And then eventually I did it. And then I found that there was no one to ride with. And I was like, all right, I got to move on. But in this space, in the real estate space, like there's like no limit. Like
it's incredible. There's so many different ways to make money, and there's so many different assets and their classes and people doing deals, and there's so many different ways to structure things. So you got into real estate, flips, insurance, mentorship. What are you really building though?
I'm building a real estate business. Nice. That's what I'm building. And I would say in the last 6 to 8 months, one of the main effects to me personally with Owners Club, joining Pace's Owners Club, was narrowing down the focus, right? Because there's a lot of shiny objects. I mean, if I played I should actually upload my hot seat from Mastermind. I sound like an absolute scatterbrain. I'm all over the place. You know, I'm trying to flip. I'm trying to buy and hold. I'm doing life insurance. I got my contracting business. I'm still working overtime out of the whole. Like, what are you doing? Funnel, right? And one of my older, you know, I call him my work dad, my older electrician. He basically got me going, working on the side and learning how to do the residential business. Work. Yeah. He used to call me Iceberg Staine. He goes, which iceberg is Staine on today? Is he life insurance guy? Is he electrician today? Yeah. Is he working out of the hall? Many hats. Is he what does he do? Are you a real estate guy today? What are you doing today? He called me up and like literally just asked and didn't hang up on me. Yeah. And it was so true. And you know, maybe in my 30s I could split my brain in all those different spaces. Yeah. And now at this age I look at it, I'm like, what's not like serving me? Yeah. And once you start eliminating the things that aren't serving you, then you could start to focus on the things that will serve you. And to that point, like you're going to get a lot of opinions. And if anyone's listening to this, like you go to these events and it's like everything counteracts what the other person, I don't even know if that's the right word, but, you know, everything works, but not everything is going to work for you. Right. Until you figure out what exactly serves you, you're going to spin your wheels for a little bit. Yeah. And also it's important to figure out what you don't want to do. Yeah. I've figured out what I don't want to do anymore. I think a lot of people in their 20s is that's a good time to figure that out. Figure out what you don't want to do. Try stuff until you figure out, you know, what you don't want to do, but what also drives you and because for me, intentionality and what this show is about is intention, impact, vision, sustainability, like starting something and like what you said, finishing it. You know, like all the way through with full intention. Yeah, it doesn't have to be perfect. And it doesn't have to be perfect, complete. But just stay consistent and don't quit. I always ask this for folks who are on the show. What does wealth and wellness personally mean to you? Time. It means time.
Freedom.
Right now I wake up and I have breakfast with my kids.
Yeah.
Now, financially, I don't feel like I've earned that right, but I'm working towards it. And, I used to leave the house at 5 o'clock in the morning, right? Like the morning routine was like, I didn't know what went on in the morning, right? And to be available to say, all right, I'm here in California on a Friday afternoon, right? And I'm not beholden to anyone else other than my own businesses. That to me is wealth.
Yeah.
And I'm cool driving. I got a 14-year-old pickup truck, right? Like I live in a nice house, but like all that stuff, you could have all that, like the nice vehicles, the big lavish vacations. I want my time because time is peace. It gives me the ability to focus on myself, focus on the things I want to focus on, spend time with the people I want to spend time with. That's to me is what wealth is.
Yeah. I love that. There's been several guests on the show that have said that exact answer, and how freedom is more valuable to them than things or even, trips and that sort of thing. So that's really cool.
I'd rather my wife have the nice vehicle
that you get to drive once in a while.
She's the passenger princess. So I'll just hop in there and go.
Awesome. Kind of want to wrap things up here. At the end of the show, we typically do a rapid fire round.
Sure.
So I'm going to ask you probably a series of like really short and sweet questions. Just whatever comes off the top of your head or the heart. Starting with, what is your favorite deal structure right now?
Cash. I like cash. And it's quick,
liquid. Yeah.
Quick and fast.
So that would be for wholesale or buy and hold
across the board.
Across the board.
Yeah.
Cool.
I don't have to convince anyone that I'm going to be responsible to take payments over, but I love all those other deals. But quick right now, a quick and easy cash transaction would
speed and convenience
speak to my heart right now. Yeah.
I love it. Here's one: hammer or a calculator?
I'm a hammer guy.
Yeah. Okay. How about a book that's changed your mindset over the years?
I'm going to go with a recent read. I read The Go-Giver recently. And
who's the author again on that?
I don't remember.
Okay.
It was so good though.
Yeah.
And I learned
The Go-Giver.
Yeah. The Go-Giver.
Yeah.
And I have a problem with receiving gifts. Always.
Oh, interesting.
My wife has always told me, she's like, you need to be willing to receive when people are giving to you.
Because you give all the freaking time? Or
yeah. Because I'm like, I got it. I could do it.
Yeah.
I'm good. And
man of service.
Like, and it's like, when you read that book, and it's like, no, people actually want to give back.
So you sound like a Virgo.
I am. Yeah. I am. But, let them give to you. Like she's like, shut up and let them give to you. And she's right. And I read that book and I never really understood that law.
Interesting.
Until I read that book.
The Go-Giver.
It's very, very, very easy read and very worth the time.
Cool. If you could send a DM to your 25-year-old self, what would it say?
It would be a phone number. It would say, please call my buddy Wayne. Right? You didn't know Wayne when you were 25, but call your future buddy Wayne and ask him how to buy a deal.
Interesting.
Right.
Cool.
And he was always, I bought my first duplex at age 29 or 28, something to that effect. And Wayne would always say to me, when are you going to buy your next one? And I'm like, I can't buy my next one. I just bought the first one. It took me 7 years to buy my next house.
Oh, wow.
Right.
Yeah.
And that's a big gap. Right?
Yeah.
And in our world right now where we buy stuff every few months, that's like 7 years. Imagine going 7 years without buying a deal. That's crazy.
That's crazy.
And that person, while his method was different than my approach has been, he opened my eyes to things that I was there was another, person opening the door to me saying, there's a whole world out here, pay attention. And what he's doing, he has the same background. He's a union electrician historically. And what he does is what I want to do now. So
love it.
And that was a key person in my
What a great answer. I love that. Here's a good one for you. How about cash flow or appreciation?
I'm going to say right now, appreciation. But I'm going to be looking for cash flow in about 24 to 36 months.
You got to then convince the wife to get some in California then, because
this view here. As long as she has her Florida house.
Yeah, she has
her Florida. She doesn't care.
And in Florida, you remind me, you guys are we're in Florida again?
Sarasota.
Brandon?
Sarasota.
Yeah.
Lakewood Ranch to be specific.
Okay, cool.
We even know the make and models. That
amazing.
down. Like it's like that.
Amazing. Yeah, it'll manifest. I know it. What's one thing you never compromise on in a deal?
That's tough. That's a tough question. I would say losing money. Like I won't compromise on losing money. And what I mean by that is I look at
when you underwrite.
When I underwrite.
Yeah.
Like and when I buy it too, like I look at it like, all right, how do we write maybe a mistake that we made on the construction side? Because when I look at different variables, right? How can I lose, right? If this happens, if that happens, I think that's something I would rather cancel than lose money.
Yeah.
Right.
100%.
Don't want to lose money on a deal.
On the post-transaction side,
yes.
Things happen. I mean, investing is always risky. You can't have zero risk investing. It doesn't exist. But you get into a fix and flip, or you get into a deal, and then you bring in teams, whether it's a property management company, a contractor, or some other vendor that comes in to support that deal. How important is it to do the due diligence in vetting and verifying these teams and individuals?
Your team is everything. Without a solid team, you show up to the project and things are wrong. Every day that you hold that property is dollars lost.
Yeah.
So like the not compromise, right? Things I won't compromise on is the day-to-day where, like, why are we making mistakes? It's on me. It's my job to explain everything thoroughly, like everyone understand what the vision is here and how quickly it needs to be done. Getting out of a deal that maybe isn't going well. Some people want what they want numbers wise. I'll just cut my losses. Let's go. Even if it's out on par, let's just get out of it. Yeah. Right. Because at the end of the day, someone said this to me a long time ago, always take care of your subs, right? Even if you lose money, always pay your subs, because you're not going to be able to do the next project. And subs talk to other subs. And lenders, you're borrowing money, lenders talk to other lenders, right? So you got to make sure you pay your lenders back, because it's the key to you doing business again in the future. 100%. It's kind of like having like a bad phone call. Like you cold call someone, you have a really bad phone call. Yeah. The next phone call you make, they don't know that you just had your worst phone call on planet Earth, right? You're at, but if you go and you don't pay a lender back and default and mess up your subs, that's going to stay with you. Yeah. It's reputation. So those are things. My reputation is something I won't compromise on. I think that's the right word for it. I love that. Cool. Well, this has been great, Jason. I appreciate you. Amazing studio. Yeah. Thanks for coming, man. Thank you for having me. You guys, another episode of the Wealth and Wellness Report. If what you saw resonates, hit the subscribe button below, and we'll see you on the next one. Thank you. Thank you for having me. You bet.